All right, so right now we are at a major resistance. I've said this till I'm blue in the face. The 30,500 level is the level to watch. A lot of people kind of round it down to 30,000. No, the technical level is the technical level, 30,500. Look at what we've done right along here on the chart. Bitcoin has hammered on this over and over again. This is the daily chart. We even had a doji right here, which is a bearish signal, where it popped above and then got slammed down right to that level. I love how it flushed 2 days ago, rallied back, and now it's flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. But one of the things you have to recognize here is this longer-term trend line, which I just discussed with my live traders in office here just 10 minutes ago before I started this broadcast, is that this is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area, and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend. So for me, you're now, and by the way, these two lines are going to meet. So this is going to happen over the next week or two at longest. But right now, look for this support line right here. Also notice, I want to show you this, how if we connect these highs right through here, this line actually merges right at that point. So 28,500, 400, if we break below that, that is very bearish for Bitcoin. The bottom line is the 25,000 is just a major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, you know, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about. Yeah, so at least on my chart, right? So notice where we've kind of just stalled here. And again, that corresponds with this area, which if you take a trend line kind of right under the consolidation lows here, and we just drag that across, you're kind of just on top of that level. So right now, this 26,800 level, that's your current support up to 27,000, 26,800 to 27,000. But I do think that breaks. What you're starting to do here is form a bearish flag consolidation pattern. So bearish flag is sideways chop, which again is kind of eating up the bulls that are buying, but they're not getting a pop out of their buying because sellers are still making that selling price. So essentially what we're looking at is a break of this 26,800, sends us down to 25,000. And 25 will be a monster support. So again, that would be where you would start to potentially flip into a long position on Bitcoin. Now, again, us not breaking above 30,500 and confirming, to me, still tells me that we're still in a bear market. So you just want to be overall careful. But I do expect major support around 25,000. Well, at least for Bitcoin, it's that 30,500 level, right? So if you can get above that and confirm, that was the psychological level here that kind of denoted the 2021 lows, right? Where we had that big dip right down to 30,000-ish, give or take. So again, that would have been a key break point we can see right here. So on a technical basis, that's kind of what I'm looking at. And that's one of the reasons why I expected the market to push us back down on Bitcoin. Now, looking at like the CAC and various other indices, I think number one, you have the US markets that are more likely to be in a bear market that will continue to see selling. You have some issues there in Europe. They're still coming out of some things. But overall, the bottom line is, let's keep in mind that the Federal Reserve has said that we're going to have a recession in the second half of the year. Yes, they said mild, but Ran, you remember transitory, right? So they said transitory, and look at what we got. They tell me mild recession. Right away, my mind jumping to probably at least a medium depth recession. And then you have other players like Warren Buffett coming out saying that year over year, one of his retailers' sales were down in the last month 22%. So the consumer is stopping their spending, and that's going to create a recession. So risk assets are wildly mispriced here, and they're going to have to correct sizably. I actually have a downside target this year of 3,300 on the S&P 500, and I also have a downside target for the next year of below 3,000. A couple things. Number one, a recession in this situation could actually be much, much worse. the main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, we're still talking 4, 5, 6% inflation. Now, if it gets down sub 3, maybe they have some wiggle room, but we're not at that point yet. So to me, that's a very scary thing. And stocks and crypto have to be very aware that the Fed may be somewhat handcuffed here if we do hit a recession. And then the big question is, if we get into a recession, how do we get out? Does this market, does the global markets, do they know how to get out of a recession without the Fed printing money? And if the Fed can't print money, do we get in this long-term recession that could be very rough on stocks as well as risk assets? Like, the bottom line is the 25,000 is just a major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, you know, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about. And again, you can see on this chart, there's no doubt about it that, again, we could see that pullback here. But actually, if you just humor me, I want to show you one other chart here. It's the Bitcoin dominance chart. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. And again, if we look at this, you have a little shoulder here, right? And we have this move down here. Here's your head, and then down to the shoulder. And then we could be making a little bit of a shoulder. So if you break approximately this area right here on the Bitcoin dominance, you could actually see this coming down, Bitcoin's dominance coming down decently, possibly all the way back to this trend line. So what that would mean, it doesn't mean to me that the alts are going to rally. It just means that Bitcoin could actually play catch up to the downside to where the alts were or are.